Hey, my name is Dallas. I'm with Strickland Life Insurance Group. Wanted to talk about the pros and cons of Universal Index Life, IULs, which is the most aggressive way to approach a life insurance policy besides a variable product, which a variable product is entirely tied into the stock market, into individual stocks in particular, and does not have any caps, highs, and lows, which would be what an index is. So with an IUL, you have the potential for higher cash value growth, market linked growth. Cash value grows based on stock market index, offering higher potential returns than traditional policies. Growth without direct market risk, benefit from market gains without losing value during downturns, thanks to the caps and the floors. So you may have a stock that flows from a -2 to a 13% return, or even a 0% return. But in an index, in an IUL, the standards may be set at 0 and 10. In other words, 10% growth or 0% growth. You can't go below 0, you can't go above 10. Something more common would be maybe 2 and 7. So you can't ever go below 2%, and you can't ever go above 7%, even though the index may perform at 13%, which would be great. You'd benefit with the 7% return the entire time it was at 13. The flexibility in benefits, death benefits, and in premiums. There's adjustable premiums. So you can over and you can underfund these policies. So if times are tight and you don't want to pay a certain amount of premium within a reasonable amount, you can pay less premium for several years, and that will adjust your death benefit. You can also overfund your policy, and that can increase your death benefit. So as your needs changed, you can contribute more or less, or as your situation changes, you can increase more or less. There's tax advantages. There's tax deferred growth, which is huge. The cash value grows without accumulating tax implications, so you're not paying capital gains. Tax-free loans and tax-free withdrawals. You can access cash tax-free as long as the policy remains in force. So you can take money out that's earned from the index, use it for whatever you want, whether it's retirement or paying for a grandchild to go to college, or for an emergency, or for health care, or for whatever you need. You can take it out cash free, and it's grown cash free. Protection from market downside, that's part of the index. There's the guaranteed floor. Like I mentioned, the the growth could be between 2 and 9, let's say. And so on the downside, you'll never get less than a 2% return. But on the upside, you'll never get more than a 9% return. So you have a guaranteed floor. Well, lifetime coverage. This is permanent insurance. Universal life, which is a different type of insurance, uh, does have cash growth that's somewhat aggressive, but it could end at age 95. So this is lifetime coverage. It's permanent. It provides lifelong coverage, assuring a death benefit payout whenever you pass away. Legacy planning and estate protection. Tax-free death benefit. All life insurance has a tax-free death benefit. So you get to avoid probate court. So with a life insurance policy, the cash is usually paid out within a matter of days of filing the claim, and it is tax free to your beneficiaries. Now, the cons of a IUL, Universal Index Life policy, is they can be complex. And, when I say complex, they're components about like the caps and the floors. You don't necessarily want to go with a zero bottom and a 10 top. You may want to go with a two bottom and a 7 or 9 top, so that you are always making money. And so it's just understanding the policy. There are fees involved. The insurance company is going to charge you some money. There is what's called COI, cost of insurance, and the fees require careful consideration. There are not a lot of fees. You're going to pay fees anywhere you are, or you're going to pay for someone to manage an account. So it's not a huge deal, but it's something to understand. And the caps on growth. You may the S&P 500 might be consistently performing at 13, and you might be consistently performing at 9 in your IUL, but it's growing tax deferred, and the death benefit is tax free. So you're saving a lot of money. If you have any more questions, reach out to us, 404-640-4286 or stricklandlifeinsurance.com. Thanks.